Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne, my partner Ryan, I think has maybe gotten out the market overview, but he was working on that this morning. It is Sunday, March 5th, 2023. I think it's a little bit in front of 3 p.m. now. And I'm just going to flash our trusty disclaimer here and a couple of other things. And we'll talk about the program of macro measure, not really the program of sector situation. I'll explain why in a moment, but here's our trusty disclaimer. And here is our intellectual property rights notice, if you would kindly take a look at that. But this is the program that I want to make sure that we're good on, okay, good on recording, yeah. But this is what I shared, a lot of this stuff in macro measure. And I think it's really important. So at least watch the first part, I think, of macro measure, where I share some browser tabs, basically, for lack of a better description. But let's get into things, and I'll stop sharing for a moment, and we'll recalibrate things so I can go through them. But come on, guys, work with me here. Why I'm saying that is because there was a really big shift, and we had said that we were coming into the week. Let me share the right screen now. My bad. Oh, come on. Where's that at? Oh, right there. There we go. Yeah, so this should be the main screen, but I'm not going to go through this since I covered it all in macro measure. But I think there's a lot of important things that we've got to take into account, and I'm giving the respect to this latest maneuver we saw, and I cover this in the video. I'm not trying to sound like a perma bull, but we knew that there was, well, I shouldn't say new. We thought there was a test coming. They had a test, and we saw weakness early. We expected some weakness, and then got into that critical areas, and then boom, the rest is history. They jammed the market big, nice little bear trap, or big bear trap, and they jammed things on Thursday. They jammed things on Friday, and now we're coming into this seasonality stuff that we've been talking about, for lack of a better description. Pre-election year, March. It was a topic that popped up in Rebel Pit. So I would encourage you, because of this, 1, 2, 3, we'll do it really quickly. One, this is why I think you should at least take a glance at macro measure. One, look, some of the worst sentiment on record, right, going way back. You can check that out. You can see here, 0 DTE, 44% of the volume. So that's creating this like vacuum effect, right? Suction effect at times, and just whoosh effect, where hedging kicks in and things happen, and they happen quickly, and they happen in a big way. And just note here too, these are some of the only things I'm going to share. $1 trillion of global liquidity really brought into the system, despite, right, so far in the last few months. So if you're wondering, well, how's this all being achieved? Well, that's it, because let's just rehash, right? A lot of people not believing in rallying, a lot of people expecting downside, and there's nothing better that I've ever seen than the gang when they're in control and frustrating the living daylights out of people. They can't do it forever, probably, but they do pick their moments. And usually when so many people are expecting it is usually when they're least likely to let it happen, is all I'm getting at. But there's a lot of that in macro measure. So just keep that in mind. That's why I think it's worth it, because I do think it's worth us taking this seriously. And so I did cover fewer things than usual, but I'm going to bring up my trusty grid of the 12 sectors. And I just want to point out, I don't want to go through these, but I'll let everybody glance at the RSIs, and you'll see that in most cases, except for probably really up in here, right, with XLB and XLI, these things were breaking down and they were in trouble. But notice how they really reversed these strongly, both of them. And they do have higher RSI readings than the rest of this grid does at the moment. But most of this grid is somewhere right near 50, or maybe a little above or a little below. So I don't think you can say, well, there's no more room to run. It was a 2-day phenomenon. I think if they want to, they can certainly take things back up. But will they have their work cut out for them? Will they eventually run into former support, maybe in the form of resistance? Yes, of course they will. We have to see what happens once they get there. But I don't want to belabor that. But two sectors that look really good even though they're a little bit towards overbought. I mean, this is very close to breaking out in XLI. So if the market remains healthy and buoyant, transportation's not what I wanted. Transportation's there also. I can draw a line right on here. This is looking like it's going to try to put a little something more together to me, right? So if you start seeing the market continue to remain buoyant and you see this, let's put it right about there. If you see some names pop up in Rebel Pit, or you see them in UOA Pro, and they're in sectors like this that are showing, flashing in it, that they want to try to move higher for now, and the market's doing that as well. And TNX and ideally TNX and dollar DXY are down in TOS. Those are good signs for this to continue. But you can see this is a real save. We thought that they were going to be weak. We thought that their time would come and they'd have to save the market. They had to step up pretty much then and there. And there's just no denying what they did. And I covered this, probably over-covered it in macro measure, but there you have it. I mean, this is just a quick view on it once this populates. And you can just see, right, get below the bear market downtrend line. People that were using that as a stop, people that were using that to initiate new shorts, figuring that if it didn't convert to support, as it apparently did by the end of the week, right, they would get short, and the 200 being right there, get short below there. Well, guess what? And then they laid that trap, and you can see the result. So I'm thinking, again, macro measure, I covered it, but above the 20, I think it's almost, they get above there. I think they're really gonna, it's almost, high probability in my mind, at least, that this thing trades up to that 408, 409 level we've been looking at. But getting back into the sectors, everything could change quickly here, because look, like just picking one here, there's a flat line right near there in XLF. And this hasn't been a great trader of late, but there's nothing stopping it really, in my mind, from getting up another percent. I'm sorry, another dollar from here. Or at least another percent or two, right? Not a big mover. I don't mean to trade that, but I'm just saying that even things that weren't looking that good could have more room to run. And with the way that everything shifted, I'm prepared to give them the benefit of the doubt that they're at least going to try to run this thing a little bit further, these things a little bit further, and maybe some of them break out. I mean, this, even despite all this, there's still higher lows getting put in XLI over here, right? And the same thing in XLB. So I did add some, I've got some slated to be added. I did add, I think, a material stock or two, added some energy stocks as longs, had this in as a possible breakdown. Well, if any more paper comes in there, I'm going to have to put a bull companion to go with that because of what they're doing in there by the end of the week. But again, that's why it pays to be dynamic. But look, the bottom line is everyone can get a quick view of this grid, and you can see that things changed. They really strongly reversed things out of nosedives that they were on the way towards having. And the RSI is nowhere near overbought really on any of them. And even the ones that are near 60 or above still have room before they'll get to 70. So if that's the case, there's plenty of room for almost everything to go up. And it was certainly risk on, right? You can see that they came in after virtually every sector. So this to me was just about supposedly, I would say, I guess, more risk on. And you could see that even in an interesting way with XLP, sure, it recovered, but XLY visually, I think, recovered a little bit better, visually anyway. And that's sort of interesting, right? Because I think these are a couple that tell you whether you're getting risk on and people are switching back. If you see XLY doing a little bit better or outperforming XLP handily, but they came after that as well. I think my macro take on this is all like the reasons that they're using to justify this is a farce to me. It doesn't agree with my macro assessment, which for whatever it's worth. But I don't, none of us trade on that. I try not to let the ideas that I submit to our services be affected by that. I note that when I think it is worth noting, but if we're all about just capturing the momentum, the movement, right, in the short run, I don't want to get bogged down on what could happen several months from now and let that stop me from taking advantage of opportunities that are here in the here and now, put quite simply. So that's the quick view of the 12 that we normally start out by covering. What I'm going to do is go through some of the other things that we cover, and that would start with SMH, which is always an important area in my mind. And this thing looked like it was in trouble. You could see on Thursday breaking down below my support line that was there, and they reversed it by the end of the day, right? We all know what happened. Now, in just, hops and a skip, not even a hop, skip, and a jump, they get it back above support, at least that support line, and it's above all the SMAs out there, even the 20, which is the light blue one. So that's concerning me a little bit because, right, I really felt as though this would back up a little bit more and probably come down into here and test. And I think we have a couple things on that might have to be morphed if this continues. But it is what it is. It was really the whole market Shanghaiing. There's a little gap this thing could try to fill as well that I think, well, maybe I shouldn't say that. I think it's still there. 245.80. What was the high? 245.18. Yeah. So the little gap is still there. But look, it's only at 55 on the RSI, and they've held it. And technically, this is a higher low than here, right? So that's a little bit better. Give them the benefit of the doubt. If you've got a short on and anything in there or whatnot, you may have a fresh start to the week. Just remember that we're short-term overbought in a lot of things. So I don't know where the SMH is. Let's find out where the SMH RSI is right now. So on the 30 minutes, it's at 73. So again, that's overbought. I'm not a stickler for it has to be above 70, but that's what most people look at. It's above there on the 30-minute. I don't think the 30-minute is a chopped liver time frame. I think it's something I like to keep on my charts and keep an eye on as something that can help you to really see, I think, finer details and catch things a little bit sooner. If you kind of have a favored scenario, let's say, for example, you're bullish and the 30-minute starts to really show a change, then that's something important. In fact, let's go back to Thursday. I didn't chart this at that point, but here's Thursday's action, gap them down, put the low in really right in the first 30 minutes. And as we talk about in Rebel Pit, the low or high is often seen probably 4 out of 5 days a week. You'll see the low or high definitely by 10:30, sometimes by 10 o'clock, but there was your low for the day and the week. And from that point on, I think what you'll see over here is if we make these a little bit easier to see, I think you'll see that the RSI, which is the line, and the rate of change, which is the histogram in orange and yellow, and that they all start perking up, right? They all start doing better and better and better. And then you finally get the breakout there, and that's something you could be on guard for, I think, by looking at the 30, saying, look, for now, I don't know what happens by the end of the day, but for now, it's working. So if they have basically, right, you have this down session on Friday, they gap them up, they sell them on Monday. Once again here, by the end of Tuesday, they sold them off. And even on Wednesday, they sold them off from where they were early in the morning. And then you start out with this gap lower. They've moved them down for the most part of the last 4 sessions. Right. And so that's why I've got these counters on my charts, because you can see that how the action's shaping up, and when something's fresh or stale. That question came up. But you've been going up for 8 days in a row. That's starting to get stale. You don't usually see things that last for more than 8 days. I've seen it where things have lasted 20 days, but there's other factors involved. But most of the time, right, you usually get several days up and then a few days down, several days up, a few days down. So in a bull market, I would say you maybe average like 5 days up to 2 days down, something like that. Would just ballparking it. But this looks interesting here. And I think the bulls really did come in and they really regained a measure of control, right? Where they were really on the ropes and about to lose it. And in the nick of time, right? Dudley Do-Right style, or whatever, something like that from my memories as a kid, cartoons, they arrive at the nick of time and everything's wonderful again. But that's the thing. It's hard to rationalize that, but I think overall you're better off if you do and just say, look, This is the market. It is what it is. It doesn't make sense. It doesn't have to make sense. In some ways, it does make sense because these guys are, if you think of it as these guys are using this market, these prices as a mechanism to thwart people and get people to capitulate and things like that, and really spearfish people and firms and so on, then it does make sense what they do, right? But if you look at it like, how does this make sense? We're in a rising interest rate environment with high inflation. A lot of it doesn't make sense, that in that sense. But that's why I think you're better off just focusing on the action. But again, like this is one I haven't liked, and I've made that clear. I haven't been, ambiguous about that. But if you look at this, it's in this rising channel, right? And it was in this little mini channel, and it still is, but it could leave that channel that it's been in, this corrective channel inside of the larger channel, and it could go up. And I don't like housing here at all. I can't like housing from a fundamental perspective right now. But will it matter? No, not to my trading, it won't. My opinion certainly won't matter to the large majority of market participants either. But I would be ready for this to try to work its way back up if it can bust through that resistance line. And then, you'll just use your flat lines, since it'll be above all the SMAs and maybe this or that. And remember, these guys can do this stuff for, they can, again, make things be much more irrational than most people can withstand, put it another way. But look, here's your double bottom here, right on the 50-day in gold, right on our support line that we've been using. And look at the RSI, right? The RSI was improving from this low versus the prior low. So you have a little bit of similar price action, but positive divergence. And that, that all plays in to the whole thing, but it needs to break out from here. And then we can start thinking about where does it go from there. If it doesn't do that, right, then this channel is still maybe dominating the action for now, and you'd have to wait and see what happens when it comes back towards the 10-day, a flat line right there near 67, which is not very far away. And then if it kept descending, then this line, of course, would matter down here near 66. We'll say 66, and let's just call it 66 ultimately, because then it would probably need to be at 66 to really show signs of cracking that trend. But you can see overall that the glimpse that we have now, I like to call it the snapshot in time, that does not look bad. And there was some paper that came in very late in home builders. I think Lennar, it was ostensibly bullish paper. Lennar, I want to say maybe DR Horton, I can't remember, but I'm going to review that tomorrow morning, and I might add that, at some point, depending on what we see, just because, again, I think things can pop a little bit more, despite whatever my opinion is. Here's XAU. Now, this thing had been really, really declining and in trouble, had put a really nice week together right at, I think there's a flat line there near that 119-ish. The 20-day is at 119.59. The RSI is only at 45. The 100-day is right near here as well. So there's a lot going on there, and I think you have to wait for the 20-day and see how that does at that point. Or if it can get through the 20-day, then you may say, well, there's a decent chance it tries to work back up towards the 50. I think some news, I'm not positive on this because I'm so busy every day, really. Ryan, Greg are too. Even my son helping us out with stuff. We're just kind of wall to wall most of the time. But I don't recall exactly what this was. I think it may have had something to do with like overseas buying in some large markets in gold and something like that, or silver positioning, and maybe some like low levels of physical being held in some places. But you'd have to look into that. I apologize, I just can't even get to it all, honestly. A lot of stuff going on. So we'll also look at copper. This is another one we tend to look at, and I didn't even look at it, really until today. But it had a decent week. I guess you'd have to say that it did a little bit better. It worked opposite of the market's action, right? Excuse me. Market was rough Monday through Wednesday, and then market jammed Thursday and Friday. Well, copper was virtually the opposite, right? But right here, I mean, this could go anyway. You could see this, like between all the SMAs bunched up there, the constriction that we're seeing, right? But breaking below the 50, you probably, there's a flat line right about there. Oh, thanks. Thinkorswim did the old percentage percentage switch on me that it seems to do at least once or twice every time I record. But I mean, anybody that's aware that flat lines exist would know there's a flat line near that 401-ish level. It's pretty much tough to dispute that. But that would be where you probably go from if you lose the 50. On the way back up, right, I think you'd probably have to start drawing a line here, right? You only need 2 points to create a line from, and there they are. So those recent highs, right near there is your level. I mean, let's just put a number on it, 4.17 ish to round it off, right in there. There's your level, I think, in that one. But so and I know hardly anyone's trading this, but I mean, if you want to keep an eye on it, because this can be, a lot of people call it Dr. Copper, because it's usually gives you pretty good tells in terms of economic activity. But look, the uptrend's there in the intermediate term, and it's still clinging to that for now. So I think it's vulnerable, but it hasn't been knocked out yet. And the market was vulnerable, and it wasn't completely knocked out last week. And look what happened by the end of the week there, right? So it is what it is, right? So this is how these guys rig things. This is how they jam things and move them around. Let's take a look at the late sweet crude oil future. This has been really a tantalizing situation just at times. Let's see. I'm willing to go with this every time. It looks like it's either going to break out or break down, but this is a great example of why you should really wait for breakouts and breakdowns, right? And not jump the gun, because they've reversed this so many times. Look at, it's the channel it's in, this horizontal channel that you can already draw with your own eyes it is what it is. But look, I've seen some bullish paper in here. My best insight on this one would be, I've seen some bullish paper start to stack up a little bit. It's not incredibly impressive yet, but it does seem like some people are thinking that there's a breakout about to occur to some extent. So I've got some bullish ideas on in there, but I think Valero is one that comes to mind. In fact, I didn't even have a chance to look and see how this did, but it looks like it broke out above our trigger level, and it did push up. So hopefully, I don't know if it made it to our first or second target. Hopefully it got close for some people so they could address that. But yeah, I mean, the paper came in energy. I may have even added an XLE bull idea for now, but this has been hard to trade. I mean, I think this has just not been an easy space for months now, and there we're back on percentages. So, I think you've got to just be nimble, deft, whatever you want to call it, in how you manage this for now until we break out of this pattern. And clearly, if you're a bull, you want to see that 100 get taken out. That probably lets you visit this area up in here. And again, that's only up a few dollars, but money can be made. In fact, I think we have an XOM position too. I can't remember if I wanted to get to it and I added it. Just too many symbols, and there's so much stuff we're working on, and it even goes on during the weekend, so in nighttime. So it's just so hard for me to remember. By the time I'm here on Sunday morning trying to recharge after this is all over, just for a few hours, I can't remember everything I'd like to. But you can see, I mean, this is not that bad. This looks good. I mean, Exxon held the 100 for 6 sessions in a row, and if you add this one, like, you're mainly like out of the last 8 sessions, it's tested that half the time or more and held. Now it's about to take out the 20 in light blue, and if it does, all the SMAs will be to the south, as I like to say, and then you start looking at your resistance levels. But that was a pretty good day. I mean, the volume isn't much to write home about, but it was a pretty big candle. We'll see if there's follow through, but I'm just noting that it's because I don't have a lot of great insights other than, the risk is back on. We don't know how much of that is zero DTE, poor positioning, the whole works. Don't want to sound as though, I'm equivocating. I give the benefit of the doubt to the bulls for now. on things. We don't want this one. We want LB there. We want this one here. We could probably look at May, since we looked at that for others, but we've been looking at this. This doesn't seem to be singing the same tune, right, as the housing sector. Let's look over here, this as well, at this one. Let's see what kind of activity that had there. So yeah, I mean, these are not looking that great. So again, this is, I think, the housing stocks being out of step with lumber. You know, for whatever that's worth, this is just not we noticed this was looking good here. Luckily we put a line here that mattered. The things got battered. There's a good example of the count getting to 16. You know, when you see how long it's been, and you kind of know with each passing day, if the technicals start showing you there's a potential for a quick reversal. This is what helps me when I see something that's gotten what you would say would be stale. But look, this is on support. Geez, once again, percentages. I don't know what every time it seems like I switch to a future, they don't like that. But yeah, so anyway, you're right there, right? They're trying to hold it above support. But I'm looking at this not so much obviously for trading, but just putting things in perspective. And again, I don't see with rates and affordability and the collapse in new loan generation, all these different things, I just don't see how housing is going to be able to pull it off. But on the macro opinion side of things, but maybe it is, maybe it is. So I'm trying to think of what else I could maybe share that would help us out. Oh yeah, I'll just take a look at the VIX. But overall, I mean, my assessment right now is that this was a heck of a save. We said they had to sort of step up. They eventually did, and they did it in a big way. And as I said, I think the VIX now can, if they continue to apply pressure, obviously the market, they continue to generate more rally. I think VIX threatens these lows. If you see them having the market up 1 or 2% on any particular day, or especially early in the week when things are short-term overbought on some of the intraday charts, and you see the VIX holding its own, that could be a good little sign for people anticipating that there's going to be some profit taking, and someone's going to say, I've seen enough, and step in and cranks out some shares to sort of beat down that oversoldness somewhat. So keep your eye on that, would be another thing I would encourage folks to do. But as far as the sectors go and sector situation, I mean, it's when it becomes risk on like it has, we're stuck with, well, they're buying mostly everything. And then really what it comes down to is what charts look the best. And I think XLI has explosive potential. I would say if you see ideas or you want to find ideas on your own, that would be a good space to hunt for the bull scenario. And this is not far away in the basic materials. And we've seen some paper in industrials, little bit of paper in basic materials, have seen a little more paper in XLE and UOA, and never rule out tech, right, as well. But those are ones that look like they're not far away. If they put a little push together, pull back a little bit, and then put a higher low in, and then try to break out, you could have a decent shot at a breakout trade. I was talking to Ryan late last night about some stuff because, I feel like we always find a way to work at night and over the weekend. I don't know what's wrong with us, but I couldn't remember the name of something. Let me see if I can find it now, because I think I put it in a couple. Yeah, I just checked it out. We've got XOM in as an idea. FCX is in as well. It kind of fits with what we're talking about there. We had Boyle in, which put a nice little run together. Oh, we've got COP in right now, COP. I was trying to remember what we had in. We got Bolero in terms of what I mentioned. And I had XHB in as a bear. And of course, that probably, I don't know if it triggered or not, but if it did, it didn't work out. Or maybe you got lucky to get to the first level. at most. I'm trying to think of the name that I put in though, and I just wanted to sort of point something out, and then we'll wrap things up because I felt like this was an interesting little trade that developed for us in UOA. Oh, that's what it was. It was Twilio. So I think I had a 7111 trigger on this one, and this came in on Thursday, the UOA, and it was a stock that I thought looked pretty good, but it kind of reminds me a little bit of, right, something that was really hanging in there well. You know what I mean by that is you could see that this thing bottomed at 41 and then consolidated for a while, and then finally here put in probably the real good tradable bottom in retrospect, and then started to do very well from there. So the low there was about 43, ballparking it, and look how far it ran from there, right? It ran up to nearly 80. So that's a $37 run in from what was a $43 stock, and you're doing that in what, little less than 2 months, I think it was around 2 months we just looked at there, right? So that's incredible. And what I saw when the paper came in was, right, that this is shifting all the SMAs around. Not the super long term like 200 and 150, but almost everything else is neutralized or starting to shift. And it's been holding on really well above that 20 there in light blue. And then it had done that day, and it was pretty darn strong, kind of like hanging in there really well relative to its recent high, and right relatively far away from what I would call the recent low, tradable low. So I'm thinking that this thing just continues to act well, and it was actually acting pretty well that day as well. When the paper came in, it was already up a lot. And I don't like adding things that are already up 6%. I'd rather add something that's up 1.5% with a chance to go up, say 4%, because it looks like it's got the right stuff technically. But you can't always get the EOA to cooperate with perfect timing. But hey, look, it showed up. It was, I think it's 70-30. We set 71.11, and then it went up to and through 71.11. It closed at 71.64. So on a closing basis, the trigger held, which is what we want. And then they managed to have it continue up to 75.25. So not a world beater of a trade, right? But if you can get in on dirt cheap options with a day and a half to go and turn that into something good. I think we got into the idea was to get into the 71 calls for $1.25. So at the high, those were $4 in the money, and you paid $1.25 for them. So if you traded in godlike potentially, right, if you traded like a god, you would have been able to sell those for $4-ish. And that's a nice little $2.75 return on $1.25 of risk. But I'm not here to say how wonderful that was, but I'm just trying to point out that XLI reminds me of this. So if you see names in XLI, or you see XLI itself, look at that, how that's been hanging in there really well versus what other things have done during the market's sort of turbulent times. It's right back very close to the high. So in other words, if they're going to break this market out, and you've had something that's been triangulating for this long, this is one I would keep an eye on, because you can see I've already got projections in there from another when I was looking at this for other ideas. So I was willing to be a bear with it possibly breaking down here, but I'm also not that worried about it, because again, once something reverses, if it goes below our trigger level on a closing basis, we're willing to stay in the trade. If it can't hold on a closing basis, we usually either neutralize the risk, personally that is, or we just get out of the trade. And that's what a lot of people in the services do. But just to show you, I'm not going to feel like bad that I was a bear here where it could have broken down, and I'm a bull now where it could even falsely break out, because all you can do is prepare for what can happen. But this could be something that breaks out, could put at least a nice little pop together, much like the Twilio, which really hung in there and then delivered the pop. It delivered. Unfortunately, if we caught it a little bit earlier, if that UOA had traded a little bit earlier, so our UOA team could have spotted it a little bit earlier, We could have made, even more on it and got in from a lower level, but you can't always get what you want, as they say, and we at least got something good out of it. But that's the thing. I think you're above all the SMAs here. Most of the SMAs are rising. It looks like almost all of them are rising. So this would be something worth taking a look at. Let's take a look in there, and I'll close on this. But I get myself too far afield with all these things, thoughts that come into my mind. I try to help folks out because I always assume there's some new folks trying to learn some things that I learned and try to impart those to folks. But these are big names. I mean, most of us that have been around for a little while would recognize these. And unfortunately, you got some defense names in here, and they're pretty big ones like Lockheed. You can see Raytheon. You've got even, I guess, Honeywell even could be in some ways, but certainly Boeing, right? And then you've got Northrop Grumman. I hate to see that in a way, but what can we do about it? I don't like wars. I'm not so sure anyone does. Maybe some people do. Defense contractors probably do, and we'll leave it at that. But yeah, I mean, there's a lot of those big names in there, and there's even big transport, right? There's big industrial manufacturing. You got Deere, you got Cat. So if these 3M, if these things start to see paper and those charts themselves look good, I mean, this would be one that I would be, if under the breakout scenario, I'd be, I couldn't get the ideas in fast enough is what I'm getting at. So that's what I'm trying to say, that when the sector work, there's a lot of things you can draw from it, but this is the wrong chart. Try to keep it on something that's not so busy. But this is something to me that's really interesting because of the strength that it's shown to hang in there. And again, the market's still off the high significantly, but look where XLI is. If we go back in time, right, let's take a look at a 5-year weekly. This thing is, what is it, just a few percent away from those highs right there. So it's pretty darn strong. And you can see there's a lot of room on this weekly view before it were to get out towards those Bollingers. No, I don't mean this is some incredible trade where it goes up $7, but I mean the sector itself has a lot of potential if it can take out these highs and can go. It's been consolidating and correcting somewhat, right? If you want to even say from here, but this is really where it started back in here. So you're looking at, right, almost coming up on 2 years worth of consolidation. So when something's been consolidating for as long as this has, and then it starts to run again, it could be big. And that's why the macro measure is what I started with, even in sector situation, because I'll be the first one to say, and I have on Cocktail Hour and in some webinars, and even in these videos, it makes no sense to me the way that these guys and gals are tossing so much money into this market. I think personally think they're getting way ahead of themselves, but there's always the possibility that my take is too simplistic and dead wrong, right? And that they're going to jam this thing according to that third presidential year like they typically do. And given the fact that so many are non-believers, myself included, but luckily, right, I'm not managing the long-term mutual fund. So many are non-believers. I think a lot of people are true believers and have tossed a ton at it, while a lot of people have done nothing. And that sets up for performance chasing and catch up and all kinds of things that can just be internal plumbing issues that drive the market higher, even though in the face of all that's wholesome. I mean, all that's logical and reasonable, really, is what I'm really mean. But I'm just kidding there, obviously. But yeah, those are the thoughts. People have said, please share some thoughts. Don't feel bad about sharing thoughts. So I'm just trying to share some thoughts, and hopefully, on that note, I'll wrap things up and just say, look, I hope something I've shared with you this week helps you this week and in the future. And you remember, just be nimble. Like, we're near some pretty important levels and you're not out of the woods yet. So you can't act as though just because we had a couple of great days that everything's wonderful again. But the bulls did survive. They did what they needed to do. As dubiously as they did it, doesn't really matter. They did pull the save maneuver off. And I think if they get through that 409, 408, 409 level, and then you're looking really, I think, at 414, but that we could end up getting that that another leg higher, which then would, I think this has been my level for a while, that 431-ish level, where that would really be a bull trap, because if people see yet another high being eclipsed, they'll say, wow, higher highs, higher lows. I think that could draw more people in. And if they draw more people in, you could have even more of a burst, right? And that burst could get ridiculous. And if it does get ridiculous, we'll go back to what we go, some of the sentiment and some of the stretch stuff that we look at in macro measure. And we will, where is that? No, not there. Is it there? Nope. I always guess wrong. I really have such a hard time on that it switches on me. I'm going to let that go. But percentage of stocks above their 20, 50, 200, that type of thing that we do, and other things we do. And if it gets crazy again, right, we'll know that probably there's going to be a pullback at that point, just like we saw that happen here. And we got what you would expect if you believe in that stuff. And then if that scenario plays out where they maybe get things up to 440 after they get people converting the true believers at 431-ish, then you might get another couple percent tacked on where it gets absurd. And then you probably get at least a mini rug pull from that point. But on that note, again, thanks for tuning in. I hope something I share with you helps you this week or in the future, as I always say. And everyone, stay nimble this week. Stay safe in these crazy markets. Thanks for tuning in.